there's a certain level that you have to get to in trading before you start putting risk on, risk off. And the reason of that as well is because, like you've said, you're letting your edge play out, you're letting everything play out. But let's say you've done that for 5 years and you want to increase profitability, then isn't the close, let's just say everything's refined into the next level, isn't the closest thing putting risk on your A plus setups? Because let's just say it's 20% loss, that's fine. But if you've done it over 10, you've just had 8. It's still exactly what you said, but throwing back at you in that way. Okay, cool, let's do the loss. Let's do the opposite. Let's say it's a 20% win rate, but it's 1, but then I've risked off every time. Well, 80% of them have just saved me a lot of money. A lot of money. And that's exactly why risk on, risk off is incredibly important. And that model is very similar to the way Umar's done it. And I actually quite like that, because I think that's definitely one thing I want to try and scale up is on my private account, and try and do that to the next level of maybe unlocking a new realm. If, you know, once the other things are all settled by Q2, I definitely would like to put that on, because I do agree on putting risk on my A plus setup. I do that already, but not to that degree. But I do agree on that. I do really agree on that.
Earlier on, you also mentioned, actually, no, I have another one. Have you been in a situation, because I feel like a lot of traders have, where because you spoke about backtesting, proving an edge, and then testing it live and so forth, that journey. A lot of people, including myself, spend a lot of time in the phase where you smash it in backtesting, and not even like backtesting, like you know what happened and then you reverse engineer it, because you already knew it was a buy, so you look for the buy. But I mean like blind backtesting. You go on one of those simulators, you go back a year, and then you trade a year, and then you pull out a crazy number, but you just can't do it in the live markets. So backtesting, you're profitable, you've got an edge, and you've written it down, whatever, and you can perform in a simulation. But then you go to the real life and you just don't find the profitability. And I ended up there, I was like, well, why? I'm taking the same trades, I'm doing everything I'm supposed to, I just can't do it in real life. That gap that happens, have you been there, and how did you overcome it?
I don't know. I wouldn't really say that happened, because I see my students go through that, but I think that I was more just like looking at it, I was just being a retard. That's like, I know that's such a bad answer, but like, I'm so sorry, but like, it's probably the word I should probably try and reduce using, but I just look at myself, I was just stupid. And the reason is because if I truly looked at, and this is just me, my experience, is if I truly looked at myself, well, when I was in the live markets, I wasn't actually doing 100% of what I was doing in the back testing. And back testing also, if you're sample testing or whatever it is, you have the data there, and you're also in flow, you're also in that certain mood. There's a lot of variables that you don't know. There's times, there's so many things that are not accounted for that only live can really tell you. But bar that, for me, it was that when I was losing on real life, it's because I was not doing exactly the same thing that I should be doing in the live data. That was me.
Okay. Was that down to like psychology or immaturity, or was that more down to experience?
No, it was just the immaturity and the psychology. Is like, oh wow, there's money, like I got it, and then oh damn, like this is a loss, or running trades. Okay, well I've just had 2 running trades, and this is one reason why I don't take 10Rs anymore, is because that 10R just makes a 2R feel insignificant. And because you do that, yes, I may lose a little bit of money in the long run, but from the psychology point of view, it's like, well, I'd rather secure 4R every time, because think about it, you have to go through 4 to go to 10. Simple as that. So the probability of 4 is obviously more than 10. It's just simple maths. So I would rather take 4 on a higher scale than do 10 and think that more going to go to 10, then it go to 4, come back to break even and loss. Then again, that goes back to what pisses me off less. That would piss me off. So let's just have a more mechanical approach. Where do I secure profits? Where do I secure it? But yeah, to answer that, it was more the fact of immaturity of not knowing that, and that's just a price I had to pay, and dues I had to pay in the markets to develop to become who I needed to become.